This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
I love gold!
Welcome back to Not Your Advisor with NYU Grad, episode number 500. That intro was a funny scene from the very funny movie Goldmember with Austin Powers. I thought it was a good indication of today's action. I'm recording this at 3 p.m. New York. Let's jump into today's session. Quite different from yesterday, huh? I wonder if the president will tweet about today's action or not. So for those that are new, I want to make no mistake, this is not a political episode or political Substack or political podcast. I genuinely don't trust any politician from any side. But I just find it funny that yesterday Trump went on social media and was taking ownership of the great day, which it wasn't even that great. It was up like barely, like right under 2%, which is good, but enough for the leader of the free world to tweet about? Maybe a 4% day, but a 1.9% day? I don't think so. So let's jump into today's market. I have a lot to unpack. So looking at new highs, we had while we're still open, 260 new highs on the NYSE versus 142 new lows. We had 46% advancing versus 50% declining, 38% below the 50-day, and 41% below the 200-day. As of 3 o'clock, the Dow is down 52 points marginally. NASDAQ is down about 0.6% or 123 points. And the S&P is down 26 points or 0.42% or 0.42%. If you like percentages in like 1/3 or halves, let me know. I just like the decimal. I think it's just easier to read out and to absorb the content. But I can switch to the Bloomberg style of fractions. Looking at technology and Mag 7 across the board, it was a mixed bag. But importantly, you had Microsoft down 1.2%, Nvidia down 1%, Meta down 1.3%, and Google down 0.12%. Apple was up about 0.25%. Amazon was up 1% after being down a few sessions in a row. And Tesla right now is a nothing burger at 3 o'clock. The leading sector today was basic materials, the things that if you drop on your foot, it would cause some pain. Gold and silver and miners are doing very well today. Real estate up 0.4%, consumer cyclical up 0.25%, energy up 0.17%. All of the other sectors are red. Can you guess the leading sector to the downside? Utilities? Healthcare? No, it's technology. Tech is right now down 0.75% or 0.73%. Utilities down 0.7%. Communication services down 0.7%. Healthcare down 0.45%. Industrials down 0.25%. Looking real quickly at what was strong and what was weak in the S&P and the NASDAQ, you had Axon Enterprises up 15.8%, Palantir after earnings up 7.4%, Leidos Holdings 7%, Broadridge Financial 6.1%, Archer Daniels Midland 5%, Pfizer 4.7%, Jacobs Engineering 4.2%, Intel 4.13%, Builders FirstSource 4%, United Health Group up 3.7%, CVS 3.3%, Apollo Asset Management 3.1%. In the NASDAQ, you had Axon again 15.9%, Palantir again, Intel 4.1%, Mercado Libre up almost 3%. In the S&P to the downside, some big losses here. Gartner, ticker symbol is IT, down 29%. Wow. Gartner is mostly a research company, so I don't know what's going on there with earnings. Vertex Pharmaceuticals 18.7, TransDigm 13.9, Zebra Technologies 9.9, Henry Schein 9.5, Fidelity National Information Services 9.4, IDEX Labs 5.9, Eaton Corp 5.7, the AES Corp 4.8, OneOk, the ticker is OKE, is down 5%. Coinbase down again 4.5%. Yum Brands 4.45%. SBA Communications 4.3%. Monolithic Power 4%. American Waterworks 4%. In the NASDAQ 100, I'll try to dedupe here. Global Foundries down 9.2%. Diamondback Energy 3.8%. Datadog 3.7%. KLAC Corp is down 3.1%. Oh, out of breath. So looking real quickly, I did want to make a quick shout out to Bob. I won't give any other indicators of personal identifiable information, but Bob is a paying subscriber and he executed a trade perfectly coming out of a balance area. He saw this himself. He did not ask me. He did not text me, email me saying, hey, should I get in? Should I, buy this, buy that? He learned from my methodology that I use, and he pulled the trigger on his own. Bob bought this anonymous security, because I'm not going to give it away for free, at $8.50. He is already up 20% in 48 hours. Golf clap to you, Bob. Good job. Just do not let that fall below around $8.75. You don't want to turn this into a loss. You already have good gains. So today's outperformer for sure was gold, silver, and miners. I want to cover gold real quickly. It's been flirting with this 3,400 level for a long time. We're finally above it. Again, it doesn't mean we're going to launch out of here. We need to now get above like 3,450 with some oomph to get out of the gravitational pull here of 3,400. Looking at the dollar or DXY or /DX, depending on the platform you use, we are flirting with this trend line that goes back to 2011. If the dollar or DXY or any of the dollar currency pairs continues to weaken and fails these trend lines, that's bad news. If there is a new Fed chair that's elected and they cut rates, it'll help some folks with interest rates. It will help some homeowners lock in their mortgage at a lower rate, sure. But the other thing that's going to happen is the dollar will also fall in relation to either other currencies or gold or other assets. So if you can lock in your mortgage at 3 or 2%, will it help when the dollar falls 30% and everything else that you consume outside of your housing or home rises and continues to inflate? Because inflation is raging. I want to put this very simply. The Fed is stuck. They can't really raise rates and they can't really lower rates a lot. They can do, a little quarter basis point, which is a 0.25% or 0.5 at a time. Inflation is raging to the point where we need Fed funds rate above 8-9% to fight the real inflation. But they can't because everyone has too much debt, whether it's buy now, pay later, housing, student loan, corporate debt, municipal debt, bond. It's just the debt load is too high for interest rates to rise. So they can't raise to fight inflation. And how much can they really cut? They're going to cut to zero from where they are now at 4 point something. So they're stuck. And I know the president is asking for rate cuts, demanding rate cuts. Historically, rate cuts is a very bad sign for stock prices because it signals that, there's something really wrong, the Fed got wrong, and we need to save the markets. And the Fed won't be able to raise rates to fight inflation for real until it gets so bad that everyone, like the president, whoever the next president is, and like the people on Main Street, you and me, are going to be begging for the Fed to raise rates to stop our dollar from crashing. They are stuck. So all they can do is hem and haw and jawbone. I've listed on the show notes many of the mining stocks that I follow. They're all up more than 2% right now as we speak. Just checking in real quick with real-time markets since I'm recording this live. A little bit of better action on the Dow at 310, but the NASDAQ and the S&P are closer to the lows of the day. Taking a quick look at profitable NASDAQ companies that are making new session highs. We had 16 today, including names like Palantir, DoorDash, and O'Reilly Automotive. These names have been on this list multiple days in a row. That says something about their performance. So take a look at those stocks. I'm going to switch gears. I'm going to cover the Mag 7, macro, as well as some of the best defended names.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.